So if you work in real estate, you probably have all of your incoming information set to receive real estate related stuff, right? So I've got all these accounts that share data, they share information about what's going on in the market. And one of the big things that I noticed recently was that they're predicting that rates are going to change here coming soon. So I know what that means, but I think the average public probably doesn't, and they shouldn't unless they're, completely tuned into what's happening in real estate. So I just wanted to walk through it real quick and show you what that actually means. So what we have here is a prediction. This started in 2018, January of 2018. You can see where the rates went up. You started around 4.5. It went pretty close to 5. And then it trickled down pretty quickly all the way down to less than 3%. So during that time frame, these rates are increasing your ability. As they drop, they're increasing your ability to buy. And as long as that exceeds how quickly prices are appreciating, you all of a sudden can buy more house, right? So all of a sudden, if that interest rate takes a dip, well, now instead of a $350,000 house, you can buy a $400,000 house. And as long as that happened overnight, then these houses have not appreciated that quickly in that short of time. So same thing happens the other way. You can see at the very bottom, we got down to like 2.75 or so, and that's starting to creep up. So now they're predicting that these rates are going to rise, right? So as the rates are rising, but so are prices, that's shrinking your ability to buy as you go. So what does that do? This graph kind of shows a little bit more about how that process works. So if you're looking at around $1,600 a month for your mortgage, at 2.75, your purchasing power was $400,000. You go buy a $400,000 house, you're paying $1,600. Awesome. As it creeps up, it's a little bit less awesome. So if time's going on and these rates are increasing, but time is also going on and so are the prices, your purchasing power shrinks, right? So you go from 400, 390, 380, 370 to now all you can afford is 360 for that $1,600 payment if you're going to be paying 3.75% on your loan. Problem is, if that happens over the course of a year and you've got a $400,000 buying power and it reduces to 360, well, that $400,000 house is turning into a $460,000 house within that time frame. So the product, the type of house that you're going to be able to buy is completely changing. So something to consider when you hear people sort of being pushy about, now's the right time to buy. It's because if it's predicted that these changes are going to happen, then, that totally shrinks a home buyer's wallet. It shrinks their capacity to buy a home. So, no one can predict the future, but obviously people try. That's what we're looking at right here. I try not to predict the future. I show what economists are predicting. But it's something to consider, if you're thinking about buying a home, these changes are going to move that carrot further down the road. It's going to be you're chasing a ball down a hill. So now's the time to think about it.